Are you watching prices drop while wondering if now is finally the right time to jump into the Brampton real estate market? December's numbers just came in, and what we're seeing is a classic buyer's market taking shape with some incredible opportunities for savvy investors and first time buyers. Stick around because the data I'm about to share could save you thousands or help you time your next investment perfectly. Before we dive deep into Brampton specifically, let me give you a brief overview of what happened across the Greater Toronto Area as a whole. If you missed my detailed video on the GTA wide numbers, I'll drop a link in the description where I break down those figures in much more detail. The Toronto Real Estate Board reported that annual Greater Toronto Area home sales declined in 2025 compared to 2024 as economic uncertainty weighed heavily on consumer confidence. What's particularly interesting is that listing inventory remained elevated throughout the year, which gave buyers more negotiating power and pushed selling prices downward, actually improving affordability across the board. For the full calendar year of 2025, Toronto Real Estate Board realtors reported 62,433 home sales, down 11.2% compared to 2024. New listings jumped to 186,753, up 10.1% year over year. The annual average selling price dropped to $1,067,968, down 4.7% from $1,120,241 in 2024. In December specifically, there were 3,697 home sales, down 8.9% compared to December 2024, while new listings came in at 5,299, up 1.8% year over year. Toronto Real Estate Board president stated that the GTA housing market became more affordable in 2025 as selling prices and mortgage rates trended lower, and this improved affordability has set the market up for recovery. The key takeaway here is that once households gain confidence that the economy and labor market are on solid footing, we should expect sales to increase as pent up demand gets satisfied. Now, here's something critical that Toronto Real Estate Board CEO emphasized. Governments at all levels need to provide tax relief for consumers to help ease the rising cost of living. Fair and responsible tax policies can put more money back into people's pockets, restore consumer confidence, and create an economy that works for everyone. Now, let's zoom in on Brampton specifically and see how December played out in our local market. But before I flood you with numbers, let me ask you something important. If you were in the market to sell or buy a home right now, would you want to know what happened last December? Or would you rather understand what's happening right now, month over month? Obviously, you want the most current data, right? That's exactly why I focus on month over month analysis rather than just year over year comparisons. Year over year data has its place, but when you're making a decision today, you need to know what the market is doing today, not what it did 12 months ago. And here's another thing, we're about to go through a lot of numbers, and I know numbers can be dry, but here's why I'm so focused on them. I don't want you to believe what any person, including me, thinks is happening in the market. The numbers spell everything out clearly, without bias, without emotion. You need to use this data to arm yourself and become a better real estate investor or home buyer. The numbers don't lie, and they give you the power to make informed decisions rather than relying on someone's opinion or gut feeling. So let's start with the big picture. For all property types in Brampton, total properties sold in December came in at 265, and that's down significantly from 381 in November. That's a pretty substantial drop, which isn't entirely surprising given that December is typically a slower month with the holidays and year end activities. New listings also dropped sharply to 567 in December from 1,026 in November. So both sellers and buyers pulled back as we headed into the holiday season. Active listings decreased to 1,497 from 1,994. Now, this is interesting because even though new listings dropped, our active inventory also declined, which tells us that inventory was being absorbed or withdrawn from the market faster than new supply was being added. Now, let's break this down by dwelling type because each segment tells its own story. For detached homes, we saw 299 new listings hit the market in December. These homes followed the overall market trend with declining activity as buyers and sellers took a breather during the holiday season. Semi detached homes brought 79 new listings to the market in December. This segment, as we'll see in a moment, experienced some of the most significant price adjustments. Freehold townhouses added 70 new listings in December. This property type actually showed some resilience in pricing despite the overall market softness. While inventory flows shifted throughout the month, let's see how these changes impacted home values and how long buyers are taking to make their decisions. When we look at month over month price changes from November to December 2025, prices showed mixed signals across different segments, but the overall market experienced a slight pullback. For all property types combined, the median price decreased by 1.5%, moving from $840,100 in November down to $828,000 in December. That's a drop of just over $12,000, which represents a modest cooling but nothing dramatic. Detached homes saw a slight decrease of 0.5%, going from $1,005,000 down to $1 million even. So essentially, detached homes held their value quite well with less than a 1% decline. Semi detached homes experienced a more notable decrease of 3.5%, dropping from $795,000 to $766,900. This represents the steepest decline among all property types, suggesting this segment may be seeing more price sensitivity or adjustment. Here's something interesting though. Freehold townhouses actually showed a modest increase of 1.6%, rising from $772,750 up to $785,000. So while most segments softened, townhouses bucked the trend and appreciated slightly. Now, let's talk about days on market because this metric is absolutely critical for understanding market balance and how quickly properties are selling. This is where things get really revealing about the true state of our market. For all property types, properties spent an average of 37 days on market in December. On the surface, that sounds pretty reasonable, right? But here's where it gets interesting. The property days on market, which doesn't reset after a relisting, came in at a much higher 91 days. Let me explain why this gap is so significant. This substantial difference between 37 days and 91 days suggests that a portion of the market is experiencing price adjustments and much longer selling timelines. In other words, some homes sell within that 31-day window, but many others are being taken off the market, repriced, and relisted, which extends the actual selling process to over 2 months. Detached homes showed 34 days on market, with 92 property days on market. Again, that gap of nearly 50 days tells us that many detached homes are going through price corrections before finding buyers. Semi detached homes came in at 32 days on market with 84 property days on market. This is actually the fastest moving segment relative to the others, indicating relatively stronger demand for semi detached properties despite the price decline we saw earlier. Freehold townhouses averaged 40 days on market with 81 property days on market, putting them right in the middle in terms of selling speed. Here's the key insight I want you to take away from these numbers. The large difference between the standard days on market and the property days on market across all categories is absolutely crucial to understanding what's really happening. It tells us that while some homes do sell within a month, a substantial number are being relisted, most likely after price corrections, leading to a total selling process that stretches over 2 to 2.5 months. This is a key indicator of a buyer's market, where sellers may need to adjust their expectations to meet buyer demand, and where properties that are priced right from the start have a significant advantage. If you're finding value in this content, don't forget to like this video, subscribe to the channel, and hit that notification bell so you never miss an update. And if you know someone on their own real estate journey who could benefit from this information, be sure to share this video with them. Your support helps me continue creating valuable content for you. So, to wrap up Brampton's December performance, here's what we're seeing. The market definitely cooled as we entered the holiday season, with both sales and new listings down significantly from November. prices were soft overall, showing slight declines for most property types, with the exception of townhouses, which actually appreciated modestly. But the most telling metric, the one that really reveals the true dynamics of our market, is that property days on market figure, which came in at more than double the standard days on market across all property types. This signals that homes taking the traditional path to sale are moving in about a month, but a significant portion of the inventory is facing longer, more challenging sales cycles that involve price revisions and adjustments. So, what does this environment mean for you? If you're a seller, this market requires patience and strategic pricing from the very beginning. Overpricing will likely result in your property sitting on the market, going stale, and ultimately requiring a price reduction anyway. Price it right from day one, and you'll be part of that group that sells within 30 days rather than the group that's still trying to sell after 76 days. If you're a buyer, you may have significantly more room for negotiation, especially for homes that have been on the market for an extended period. There's less competition, more inventory to choose from, and sellers who have been waiting months to sell are often more motivated to negotiate. This is the kind of market where doing your homework and understanding the numbers can translate directly into thousands of dollars in savings. Listen, whether you're looking to buy your first home, sell your current property, or add to your investment portfolio, the key to success in this market is having someone in your corner who understands the numbers and can help you navigate these changing conditions. I want to invite you to book a call with me via my Calendly link, which you'll find in the description below. We can talk about all things real estate, and I can go over an in depth analysis of a potential home purchase or provide a comprehensive home evaluation. As a licensed mortgage broker, I can also assist you in getting a new mortgage or restructuring your existing one to better suit your financial goals. Don't leave money on the table or make decisions based on outdated information. Let's have a conversation and create a strategy that works specifically for your situation. Stay savvy, stay informed, stay knowledgeable, and until next time, may your investments flourish and your dreams of homeownership become a reality. Catch you in the next one.